Here are 3 industries that I personally believe would be valuable for any investor to add to their portfolio. Now, these 3 industries, keep in mind, I always keep them as a staple in my portfolio no matter what, because these have proven to perform in the long term. And here's why you should be a part of them. So number 1, gold. Gold has always been such an interesting investment. It's always been like a precious metal. And I know some people absolutely love gold, like they stack up gold in their house, and some people hate gold. I think that gold is a really valuable investment because it's proven its long-term value over the course of thousands and thousands of years. Just because we decided that gold is valuable isn't enough for us to decide that, hey, it's always going to be valuable, because that decision could be reversed. However, it's so ingrained in our society that I believe that gold is here to stay. I believe that it has true value and it has utility as well. And it's also limited. Even just in terms of supply and demand, it's a valuable asset to be holding. So hopefully you guys are holding some gold. Now, it doesn't literally have to be gold bars. That's the thing. There are many things that contain gold that aren't necessarily like bars of gold. You know what I mean? So you want to have some sort of exposure to precious metals. Some people really love platinum. Some people love silver. But I think in any investor's portfolio, precious metals definitely have their place, and they really, really help ground the portfolio. So it becomes sort of like a foundation. We're not talking about like crazy returns here. You can stack up some gold, just keep it in the bank or keep it stacked away in a safe somewhere. But as long as you're stacking up some sort of precious metals, it protects you even when things are very volatile. And you never know, something could always happen where all of a sudden regular currency is devalued or gone, but because you have gold, because you have these precious metals, maybe silver, right, those can skyrocket in value. Anyways, a really valuable asset to have. I personally believe in precious metals, and I believe that they're very important for my portfolio. Now, that's up to you to decide whether you think it's important for yours. And the thing is that you can have massive utility with gold, right? Even silver and platinum. What if you got a gold watch, for example? If you have a gold watch, you're still holding physical gold, but you also have utility out of that gold, right? It's not just a bar sitting there. You have like a watch or something, or maybe gold rings or necklaces or whatever it is. Just in terms of it being literal physical gold, it has value. But on top of that, it could be tied to a brand name like Rolex or AP or something like that. And so it has an additional layer of value because it's not just a piece of gold, it's also a brand that's very well known and respected, and people value that brand. So that's the first thing that I like to keep in my portfolio as like a foundational building block of my portfolio. The second thing that I like to keep is real estate. Now, real estate tends to perform well over the long term. So if you look at the entire history of real estate, it always just tends to go up and up and up in price. One of the biggest drivers of that is the cost to replace some of that real estate. It would cost a lot of money to build some of those houses, and so they're just naturally growing in value. And what do you think is going to happen in 10 years, 20 years, 30 years, 50 years? It's probably going to be even more expensive to build those same houses, those same apartment buildings, those same commercial buildings. It's going to take a lot more money to do the exact same thing and to build the exact building that we have today. So if you're buying assets in strategic locations, even if they're overpriced, it may be overpriced this year, but what about in 5 years? Oh, that same price is now underpriced. So what is overpriced and what is underpriced? It's all very relative. It's relative to time. Yes, I may be overpaying for this building right now, but in 5 years and 10 years and 20 years, I would have really underpaid. It might be worth double that amount. So obviously we're buying very valuable assets, trophy assets, stuff that's not really easily replaceable. But real estate really becomes a foundational piece of your portfolio, because now you're building everything on these building blocks that don't really move. It's just kind of sits there and makes you money, right? Hopefully it cash flows for you. If you're doing it right, it should be cash flowing for you. We have gold in our portfolio, we have real estate in our portfolio, and we're beginning to build some sort of foundation for the rest of our portfolio. So now, once we've built a solid foundation, we can start going a little bit more risky. So far we have gold and other precious metals, right? Maybe diamonds, maybe we're using some sort of jewelry to invest in as gold. We're investing into these things and we have utility out of them, but we're still maintaining that precious metal status. Number 2, we have real estate. Very important. I believe that real estate is really a foundational building block for almost anybody's portfolio. So it becomes this thing that stabilizes the whole portfolio. It still fluctuates a little bit, right? You could buy real estate really expensive and it could crash down for the next 5 to 10 years, but the likelihood of it coming back up is pretty high. I'd say generally speaking, there isn't really a bad time to buy real estate. Even if you're buying at the very top, the chances of it going back to that level are very high. So even if you bought at the highest possible price, so within 5 to 10 years, who's to say that price isn't going to be higher than where it was at the top of the bubble? That seems to always happen. At least looking at history, price seems to always create all-time highs. It's always creating new highs, and it goes higher and higher and higher. We have gold, we have precious metals, we have real estate, and the third one is physical assets. So this can vary a little bit. It's not as illiquid as real estate. This can be a little bit more liquid. This can be assets like yachts and exotic cars and stuff like that. Those assets, they can cash flow. If you're running it correctly, those assets should be cash flowing for you, and they're also going up in value. So as you'll notice, all of these are very strong inflation hedges. So we're using these different assets to hedge against inflation. We have gold, we have real estate, and we have other physical assets. These physical assets is kind of like the miscellaneous category. Some people like exotic cars. They'll have $10 million, $100 million in cars. I always used to watch those videos and see people with tens of millions of dollars of cars just sitting in their garage. And guess what? They're literally making money on that. That's part of their net worth because they own these physical assets. They're combating inflation. They're not losing money due to inflation, and their cars are going up in rarity and in value. It's kind of like art, right? Which, by the way, you can also invest in fine art. If you know what you're doing, you can buy art and just store value in that art. You're number one, protecting yourself against inflation, but number two, you're probably making money on it, you know? And so if you have all these different assets as part of your net worth, this builds a very strong foundation for your entire investment portfolio. Once you build your foundation, once you have your three categories, precious metals, real estate, and miscellaneous physical assets, we have other things that we can start investing into, something more risky, maybe Forex, maybe stocks, maybe Bitcoin, right? These are definitely riskier investments, and they provide a much higher upside, much more aggressive upside. You know, they're risky. You could technically lose money on those. But the point of the foundation is that even if you lost everything else, you would still be fine because you have your foundation built out for you. You want to have a strong foundation going into investing because that's what's going to keep you confident. It's going to keep emotion away from your investing because you know that, hey, even if I lose this entire investment, I have my foundation. My three pillars in my foundation are holding me strong. Even in the storm, even in recession, no matter what happens, I'm still going to be okay because I have my three investment categories. So the important thing here is make sure you build out your foundation first before you go out and you build out anything else. And then once you're stable, once you've stabilized your portfolio, from there you can start investing into riskier things and trying to generate a higher return for yourself. From there, you just scale, obviously. So there's a couple different steps, but the first one is building out that strong foundation. All right, guys, make sure you like, comment, and subscribe, and I'll see you all on the next video.